with the top three things in Keith's macro notebook. Starting with number one is China. Chinese growth continues to show signs of slowing, with a new low in the PMI this morning for January of 49.6. This is effectively a 6-month low and a deceleration versus December, and December came in at 50.5, and so below 50 is obviously signs of a contraction. Chinese stocks are obviously also reflecting this, now down about 3.5% for the year to date. Second thing in the notebook is Europe. Europe is really in contrast to both Asia and the U.S. in terms of consumption growth and how consumers and consumer stocks are doing, which in the U.S. and Asia are slowing on the margin. European growth, as far as we can tell, continues to accelerate. And the big thing this morning that came out was a PMI for January, and Germany is once again leading the way. German PMI for January accelerated to 56.3 versus 54.3 in December, so definitely in the expansionary phase. And then you just wanted to emphasize also that the euro and the pound continue to look good in our quantitative model. The last thing to highlight, number three in the notebook this morning, is commodities. Once again, CRB index performing well, beating the Dow for the year to date. Natural gas is a big driver there, in part being driven by the cold weather in the Northeast in the U.S., but natural gas at 4.76. Gold also, signaling well, continues to hit higher lows. But our inflation call isn't necessarily just about commodities. It's more broad-based than that. But one thing to think about, especially as consumption stocks aren't working, is picking some of the the commodities that are doing well for January as part of your portfolio.